we're paying out dividends right now from the last quarter, and those are ranging anywhere from 3.5% to something like 7% on an annual basis in terms of what folks are getting right now from rental properties. And it really just depends on what areas of the country are you maybe investing. If you're investing more for a dividend income or more for property value growth.
For our FinTech Spotlight segment this month, we are featuring Arrived Homes. This is a platform built for people who want to invest in rental properties, but don't want to buy a whole home or deal with the operational headaches. I've invited Ryan Frazier, the CEO and co-founder of Arrived Homes, to tell us more about how their site can help everyday families invest in real estate. And we're also going to discuss why investing in real estate is a smart way to diversify your portfolio. Welcome to the show, Ryan.
Hey, Andy. Thanks for having me on. Excited to jump in.
Absolutely, man. Thank you for being here and talking to us about this important topic of real estate investing. So let's talk about that. Why is investing in real estate a smart idea for people to consider?
Yeah, I think that for a lot of people, they really start to think about real estate as a part of their portfolio just for, diversifying. Maybe they're investing in the stock market, they're happy with where their savings is at, and they're trying to think of, what other areas do they want to invest. And one of the reasons why I think, real estate has been such a long-term kind of fixture in people's portfolios is that it's just been so consistent year after year. And a big piece of that is that there's just multiple ways that you make money. So you can make money from property value growth as properties, go up over time. And in times like these, that can be a great way to hedge against inflation. And then you also have rental income. So they're generating income that continues to get paid out after any of the expenses for operating the real estate, of course. And those two things kind of work in tandem where, let's say there's a period in time where maybe property prices do go down. You still have that great cash flow that's driving consistent returns during that period. And then the last thing I'd say is that there's been phenomenal tax benefits of investing in real estate. And so, that's sort of a phantom hidden kind of aspect of things, but it really does help, boost what is the net takeaway, what's the cash that's coming back into your pocket as you start to do things like, using depreciation to offset your taxable income. And real estate is one of the first places that people start to do that and start to think about that.
Yeah. I used to invest in real estate probably 15 years ago. My parents and I went in on a home where I lived in this youthful part of Metro Detroit where they're like, hey, let's take advantage of this, and make some money. I think I read some Robert Kiyosaki books and I'm like, oh yeah, I know how to be rich, Dad. So let's do this. I'll help you out, Mom and Dad. I'll be the landlord. I'll tell you, man, it was a lot of work. It was a lot of work taking care of a house and all that went along with it. Talk to us. You just talked about some great advantages of investing in real estate. Can you be real with me and talk about some disadvantages of investing in real estate as well?
Yeah, absolutely. I mean, I think that you really nailed one of the big ones, the reasons that kind of keep folks from jumping in. And it's just that it has such high time commitments. Whether you're dealing with the day-to-day operations of, a piece of real estate or let's say a rental home, or, managing things like tax filings or property insurance or putting it inside of an LLC, or dealing with a, property manager who's helping you facilitate. There's just so much involved day to day and kind of dealing with real estate. And so I think for a lot of people, even if they have the money to go and invest and buy a whole home, oftentimes the time commitments kind of keep you out. It's funny. I think a lot of people will, you look at like passive income as a desire to bring you into real estate. But the reality is if you're directly investing, you're kind of getting a second job. And so that's, absolutely one of the potential drawbacks, something to think about. And for some people, that is the right decision because, they're excited to get really hands-on with the investment and maybe try to add value. But for a lot of folks, if they aren't looking for that additional work, if they don't have more time in the day to take that on, then, that can absolutely be a barrier.
I think that's a great breakdown because I will definitely fall in the category of busy parent that doesn't have a lot of time. Or at least I want to spend my time in other fashions, and also a guy who's not very handy. I'll be honest with you. My wife fixes most stuff around here. I am helpful in other areas, but that is not my forte. So talk to us about how Arrived Homes kind of takes the advantages of real estate investing and then skips the disadvantages for people.
Yeah. So kind of reflecting on Arrived, really it's a way to make it easy to invest in rental homes. And what we do is we take a home, place it inside of an LLC, and then allow our investors to buy shares. So you buy a portion of a house, and that starts from $100. So you could get started, investing in individual properties. Still that same experience of figuring out, what city, what homes do you want to buy, kind of like browsing Zillow, but with a buy button right there where you can buy shares. And part of the thing that we really tried to do was just lower the barriers to entry, whether that's the high capital commitments to invest in a whole home, or the time commitments that we're talking about that leave a lot of people from being able to invest in real estate. And so that's a bit about how it works. So you can create an account and buy shares in a home starting with $100, build a portfolio through Arrived, and then we take on all of the work. So all of the labor and managing the day-to-day operations of that property, and truly kind of making that a passive investment for folks who are investing.
That's cool. Now, I mentioned at the top of the show, you're the CEO and co-founder. So did you have some personal experience in life that maybe led you to wanting to create the solution for people?
Yeah, I think that my personal experience with real estate might be similar to a lot of folks here. I think that you mentioned buying a home locally with your family. I think for a lot of people, the idea starts like, oh, I'd like to invest in property, and oftentimes that's local because that's the community that you know. And for me, I had that same concept. Had purchased my first home, looking to start doing that same thing, but 11 months later, moved for work. And my story was, it seemed like every year or two moving to a new city, and just honestly never in the same place long enough to really start to invest in rental properties, or to really start to build equity even for my primary residence where I'm living. And I think for a lot of people, they now are thinking, okay, we're a bit more flexible, not wanting to be tied down, might want to have that opportunity to move for work. Maybe don't want to take on the debt right now because maybe they're unsure if the home they're living in today is going to meet the needs of, what do they need 5 or 10 years from now. At least for me, I'm not exactly sure what our family is going to look like over the next 5 years, certainly not 10 years in terms of size and needs and space. And so, that causes you to wait. And when you do wait, you look and you see, property values growing in your market across the country. And, so the idea for us and for me was, how could you get exposure early, and how could you start to think about, investing or owning a home absent from the home you're living in today. And so that's really kind of what that experience, I think, led me to thinking about Arrived, and how could, we really make investing in properties something that's accessible to more people, and also maybe 5 or 10 years earlier in their life than they might have otherwise started building equity.
Well, I think that's great. Let's talk about who can invest with this platform. Is this an accredited investor kind of thing? And how much do I need to be able to jump in?
Yeah. So it's really available for anyone. You don't have to be an accredited investor to invest. That was a really important part for us. And we spent about a year working with the SEC, the US Securities and Exchange Commission, to make that happen and create a process where, we can allow folks to invest in shares. And so we're excited to open it up to where anyone can invest. The initial investment starts at just $100. So you could invest anywhere from $100 to about 9.8% of the property or equity that's available. That's kind of the range. So we have people investing a wide variety of amounts. And really that spectrum is set really for tax benefits. So each of these houses are REITs, or real estate investment trusts. And that means that no individual investors can own the majority of the shares, and also that we have to have 100 investors in each house. So we've got a lot of folks kind of investing together. And then the behavior that we see is that people really invest in multiple properties. So they are definitely kind of diversifying. They're investing in properties across different cities. They're building a portfolio of 5, 10, 20. We have folks with over 100 different shares of houses in their portfolio. And it's much like investing on your own, but you can spread that out instead of putting it all into one home.
Got it. Yeah, that's a good way to do diversification. And obviously, you guys are doing these all across the United States. Is that right? Are you guys into different geos or just the U.S.?
Yeah, we're in just the U.S. today. We're in 19 cities,
Mhm.
and expanding pretty quickly. I think we'll be at probably 40 cities by the end of the year. And most of our properties are long term rentals today. So folks who are signing long term lease in these markets, and some in the southeast that are up and coming markets. One like Northwest Arkansas, which is an area where I was originally from, and then some of the higher, more dense population areas like Nashville or Denver or Atlanta, where folks are investing more for property value growth.
Got it.
And then we also have short-term rentals here coming soon. So some vacation rental properties. If you want to get exposure to the owner economy on Airbnb and the likes, we're excited to make that available here soon as well.
Wow, that's fun. That's a fun way to do that. So talk to me about, you mentioned REITs in general, and I understand that's kind of what you guys have collected here. But what's the difference between me going to Vanguard and buying like the REIT index fund versus buying some shares with you guys?
Yeah. So, well, one is the tax component, and the REIT or real estate investment trust is a tax classification. So when people are thinking about REITs today, it's often public REITs, like you're saying, through your Vanguard or brokerage account. From a tax perspective, each of our investment properties is also a REIT today as well. So you get those same tax benefits. The difference with being a private REIT, like these individual houses that we have, probably the smallest REITs that exist today, these individual house REITs. It really kind of provides a different kind of correlation to the stock market. So public REITs are often moving with market sentiment. They tend to be more volatile, and they're quite not really that connected to the underlying house prices or property prices inside the REIT. They're more trading based on sentiment of where interest rates are going to move, the rest of the broader market sentiment. And I think a great example of that is when we were early on in the COVID pandemic, and we saw REIT prices really decline rapidly, but at the same time the underlying real estate prices were trending up. And so what we're trying to do with Arrived is give people direct exposure to these houses where the investment moves in tandem with the home prices, the rental income, and it's really meant to mirror very closely what you might expect if you were buying properties on your own, versus these public REITs that have been more of a investment product, and could be great options as well, but those are the differences we keep in mind.
Got it. And then similar to, I guess, buying a stock, you guys produce dividends, or I guess that would be sort of the rental payment in this. How often does somebody get their dividend as a part of being a part of Arrived Homes?
Yeah, so dividends are a wonderful part of investing in real estate and rental properties. And today we're paying out dividends on a quarterly basis. So each quarter we're paying out basically all of the cash flow after operating expenses to investors. If we're paying out dividends right now from the last quarter, and those are ranging anywhere from 3.5% to something like 7% on an annual basis in terms of what folks are getting right now from rental properties. And it really just depends on what areas of the country are you maybe investing. If you're investing more for dividend income or more for property value growth.
That's great. Well, full transparency, everybody. I have been investing now with Arrived Homes as a single share investor. I think I got maybe $1,000 in there. I'm having some fun learning about it because I've always had an interest in doing rental properties, but didn't want the time commitment and did not enjoy the disadvantages as Ryan and I talked about earlier. They are an affiliate as well. Just so full transparency, everybody, about what's going on with my partnership with them. One question that I did have as I've been sharing my adventures with Arrived Homes online is that people are saying, big companies like this that are swooping up and buying all these homes are, really what's driving up the prices all around the country. What would you say to that criticism?
Yeah, I think it's a great point where we've really seen this, more institutional investors or investors investing in properties, and really we're trying to make that available to anyone to be able to kind of participate and invest as well. And so I think it's important to say, with Arrived, we're the only kind of company that's facilitating buying these houses where our end owner of these houses are not Arrived. It's really these individual investors who we have, anywhere from 100 to 1,000 investors per property, kind of buying shares together in these individual houses. and ultimately, benefiting from the rental property operations, the home in general. And so I think that's an important aspect for us is how can we help anyone really participate and access this economy alongside these companies that are clearly getting more effective at buying and operating homes. And so yeah, we're excited about the role we can play in helping more people access this same market alongside those companies that are buying homes.
Well, I appreciate you responding to that, Ryan. I'm enjoying owning homes in Denver and Nashville and Arkansas through your platform. I love the variety and I love the ease of use of using the platform. If you guys want to check out Arrived Homes and support this show, go to marriagekidsandmoney.com/arrived. That is marriagekidsandmoney.com/arrived. I'll put the link in the show notes and the description of the video here. Ryan, I really appreciate your time and thank you very much and best of luck in growing this platform.
Yeah, thanks so much, Andy. Thanks for having me on and for joining us and investing with us as well.